Good morning students, I welcome you all for the online class of business studies. Today we will be going to learn the particular topic. As we completed the functions of stock exchange, we have completed the stock exchange functions and the process of stock exchange. Now we will be dealing with the next topic that SEBI, the Securities Exchange Board of India. We will be going to learn today's topic. Main topic is that only. Let us have the Securities Exchange Board of India. Before that, stock indices we have learnt in the yesterday's class. There are two types of stock indices there. Let us have the stock indices, two types, Sensex and Nifty, two are there. One is the Bombay Stock Exchange, that is popularly known as Sensex only. Okay, it is calculated by taking price of 30 stocks across key sectors of Bombay Stock Exchange. Whereas Nifty, when we talk, this is the National Stock Exchange Index. It is calculated by taking price of 50% of key stocks listed in National Stock Exchange of India. So that is the Nifty, that is the National Stock Exchange Index, which is calculated by taking price of 50% key stock. Before that, I think it is some of the topic like depository participants. If you want to know, I will be taking my next classes. Issuing company, you know very well what is the meaning of issuing company. The company who want to issue the shares in the capital market is known as issuing company. Investor, those who are having lump sum savings in their banks and at homes, they want to do some investment at their particular profitable projects, they are known as the investors. Demat account also, if you want to know, Demat account is that account which is the online when you are doing the trading related to stock markets. You have to open a Demat account. Demat account is an account which is opened through the way of depositories. Depositories are known as the banks or the financial institution which do the work of trading in stock markets. So after opening the Demat account, you can buy the shares which you are interested and you can sell the shares which you are want to sell. That is the benefit of having a Demat account. It is opened by investor, I said depository participants. This account eliminate problems such as forgery, theft, because online transaction is very clear in both the sides, entries are gone. So theft, transfer delays where with physical share certificates will be stopped. Facilitate fast transfer and settlements among the parties, reduces paperwork and eliminate the stamp duty on transfer of securities. So these are the various Demat account. Depository, I already said, depository participants. Depository participants, if we talk today, it is an agent of the depository and investor has to interact only with the DP and not with the depository for all the dealings in shares in electronic form. As per SEBI guidelines, any financial institution, the share brokers, banks, etc. can become DP after registration with SEBI. DP is a vital intermediary in depository system and all buying and selling activities of shares are in the depository system takes place through DP only, that is the depository participants. Next comes stock indices. We already learned primary market and money market. If you have seen the secondary market, we have seen the differences also. Types of securities basis, if we see, there is sale of new securities in primary market, whereas secondary market they do with the second hand securities, means second time shares are sold in the secondary market. Primary market, it is issued by the companies itself. Secondary market, it is transferred between investors only. As one investor can sell to the another new investors or the old investor, those who are ready to purchase the shares of this particular investor. Capital formation, when we see primary market contribute directly for capital formation, have funds are transferred from surplus unit to deficit unit, whereas secondary market contributes indirectly for capital formation, has funds are exchanged between surplus units only. Entry, when we see all companies enter the primary market to raise capital for their operations, whereas secondary market only listed company securities are bought and sold. Geographical location point of view, when we see, there is no fixed geographical locations areas for primary market. All the institutions, banks, foreign investors, etc. constitute primary market itself. There is a fixed geographical area in not working hours for the secondary market. Prices, when we talk, prices of securities are fixed by the management of the company in the primary market, whereas secondary market prices of securities are fixed by the demand and supply factors of stock exchange markets. Difference between capital market and money market are as follows. Serial number basis, you can see there, capital market, money market. Participant. The participant in capital market and financial institutions, banks, public and private companies, foreign investors and ordinary retail investors from public. Whereas money market, the participants of money market are financial institutions, banks, public, and private companies, but foreign and ordinary retail investors do not participate in money market instruments. Retail investor, why they don't participate? Because they have to do regular businesses and therefore that money market is not suitable for them. Ordinary retail investor doesn't involve in the money market instruments. Okay, same as with the private companies. Capital market deals in medium and long term investment, whereas money market we already learned below the 1 year time any securities are there, that is deal with the money market. Instruments point we have learned in money market, you remembered CP, DP, CDs, commercial deposits, commercial papers, trade bills, treasury bills, call money market. These are the various instruments of money market. Whereas the instruments of capital market, if we see, there are equity shares, debentures, bonds, preference shares, etc. Investment outlay form, when we see, there is par value of the capital market. Par value means the rate at which it is sold, like rupees 10 each of 100 preference shares. So it means 100 shares are of 10 rupees. Rupees 10 per share of preference, that it means one share preference share is of 10 rupees. So that is the value system in investment outlay in the primary capital market, whereas money market instruments of money market are quite expensive, so his financial investment is required. Liquidity, when we see capital market securities are considered liquid because of stock exchange, but compared to money market instrument, these are less liquid assets. Money market securities enjoy higher degree of liquidity. Safety point, when we see the information instruments of capital market are riskier in respect to returns as well as respect to principal repayment, or issuing company may fail. Whereas safety point of money market, there are less risky due to short duration period of time transactions. Expected returns, when we see, the expected return is higher in capital market, whereas money market is less due to short duration period of time. Type of capital, companies approach capital market for fixed capital requirement, whereas companies approach money market for working capital requirements. So this was the type of capital and money market differences, students. I hope you have understood there. Next we will be going to learn some benefits of stock exchange, online stock exchanges. When we go with the some benefits of online stock exchanges, students, there are the two main benefits of stock exchange. One is demutualization and second is dematerialization. When we talk about demutualization, student, earlier in the intermediaries, that is brokers, used to own, control and manage the stock exchanges. This ownership and management of stock exchange by brokers often led to conflict of interest between brokers and their clients. To solve this problem, government did demutualization of stock exchanges. So demutualization is that, student, you know, mutual understanding of the traders, that is investor as well as the issuing company, the shares and transactions are done between one party to another party. So that demutualization was missing in the earlier period of time when brokers were hiding the real amount of transactions and they were taking the benefit of extra commissions from the exchange of shares from one company to another. So that has been stopped. Demutualization referred to separation of ownership and control of stock exchange from the trading rights of members. Through demutualization, there is reduction in chances of brokers using stock exchange for personal gains. Dematerialization point, when we see, student, a share certificate is a proof of ownership of securities by an individual. In purchase and sale of securities, share certificates are transferred, so there are chances of theft, forgery, delay and other problems of paperwork. To eliminate this problem, an electronic book entry form of holding and transferring securities has been introduced. This is referred as dematerialization of securities, more commonly known as demat account. That is, no transfer of documents in material form. Okay. Transfer is shown by crediting or debiting the demat account of the security holders. So this dematerialization has materialistic things can be seen. Now the transaction, though you are getting receipt or not, but online transaction can be seen by you people by when the amount is transferred from one account to another account for the purchase of shares, and when the shares has been named in the name of the person. It can be also seen. The dematerialization proof is there when we talk about the online trading. So there are the two benefits of online stock exchange, that is demutualization. You can see clearly whose company share you have purchased, how much shares amount has been increased, that it can be known to you, and the same for the issuing company also. Dematerialization also, theft, forgery and other things has been stopped. Now you can clearly see how much has been reduced from your account and how much has been added, in which place the money has been transferred. That things can be clearly known to you. All India level stock exchanges now is a new next topic for us. We have already introduced with it when we were learning types of stock exchange. Mainly there are two types of India has two all India level stock exchange. One is National Stock Exchange of India and second is over the counter exchange of India. When we talk about the National Stock Exchange of India today, it was recognized in the year 1992 and started working in 1994. It means it commenced from the year 1994, though it was originated in the year 1992. It launched the capital market segment in November 1994 and option segment in June 2000 for various derivative instruments. Objective was that to provide a nationwide transparent market for equity, debt and other securities. That is the main aim of National Stock Exchange of India. That is to provide nationwide transparent market for equity, debt and other securities. When we talk about objectives of National Stock Exchange, establishing a nationwide trading facility for all types of securities, ensuring equal access to investors all over the country through an appropriate communication network, providing a fair, efficient and transparent securities market using electronic trading system. These are the objectives of National Stock Exchange. Enabling shorter settlement cycles and book entry settlements, meeting international benchmarks and standards. So this was the main aim of National Stock Exchange. National Stock Exchange, besides this, it was set up by leading financial institutions, banks, insurance companies and other financial intermediaries and was managed by professionals who do not directly or indirectly trade on exchange. The trading rights are given to trading members itself. That was a very benefit for them. Within a span of 10 years, NISE has been able to achieve its objective. That is, National Stock Exchange of India has been able to achieve its objective for which it was set up. It has taken stock market to the doorstep of investors. Now you can see how big the market of how big the population of our country is interested in National Stock Exchange, because there the people find more profit, more profitable investment within a period of time. Features of National Stock Exchange of India, if we want to say NSEI, it deals with two segments of securities. One is capital market segment, second is money market segment or securities you can say. It is capital market segment. When we see, it deals with equity share, debentures, hybrid, preferential securities, etc. When we go with money market instruments or securities, it deals with the money market, trade bills, treasury bills, commercial papers, call money markets, CDs, bonds, etc. So that is the two segments of National Stock Exchange. As we already introduced, there are two segments, capital and money market. Money market is with shorter period of 1 year, up to 1 year only. Capital market is with more than 1 year time period, all the transaction, medium and long time. National Stock Exchange is the only stock exchange that deals with money market securities to develop secondary nationwide market for them. Payment and delivery on the NSE are completed within the 15 days of the transactions. So that was the National Stock Exchange. When we go with the OTC, nature and purpose, OTC was incorporated in the year 1990. The trading started in this exchange in 1992. This exchange is established on the limit of NASDAQ, on the line of NASDAQ, that is National Association of Securities Dealers Automated Quotations, the OTC exchange in USA. It has been promoted by UTI, ICICI Bank, IDBI Bank, IFCI, LIC, GIC, SBI, etc. The main objective of OTC is to address the specific needs of small business enterprise. This is the main reason why OTC has been made after the NSEI. It was a need. Okay, 1992 and 1994 that we have learned, but OTC was started only for small business enterprise, as it was the basic development of our country. It has been set up as a second tier exchange for small investors. It has nationwide reach to provide investors the convenience of electronic trading and assure liquidity of securities of small companies. Features, when we see, compulsory market makers to provide liquidity. The OTC has introduced for the first time in the concept of compulsory market makers. What do you mean by market makers? They will also help to form the investment as well as disinvestment. Generally, small companies find it difficult to sell their securities, so banks, financial institutions appointed by OTC act as compulsory market maker. They will arrange a ready market for the small investors so that they will not be hesitating in going to the money markets. They will be able to fulfill their objectives as well. and buy or sell or a quote for the securities of such companies and keep them with the securities of small company for minimum period of 18 months. Next is the settlements. This provide liquidity in the market as compulsory market maker are always present in the market to pick up the security for which there is no demand. So this was the only the objective of OTC student, has it is the features is given there. So at the end of 18 months, the compulsory market maker arranges for another market maker or retain with him the responsibility of market maker. So 18 months after, the market maker only will be doing the settlements of all the trade, and the settlement is generally done within the 1 week of transactions. So this was a particular topic, students, advantages of OTC and other topics left out, financial that we will be going to learn in the next class. One more class is needed for this chapter to be get completed. Thank you for today's class. Have a nice day.